Now onto the Fed's inflation fight. During the pandemic and those supply chain snarls, the Fed's favorite inflation gauge, the Personal Consumption Expenditures Index, better known as PCE, surged to 9.2% in 22 with that inflation. In the most recent reading, PCE was up 2.4%. The Fed's target is to get that inflation number to 2%. We have Michele Schneider watching the market for us. One of the concerns, Mish, is that when commodity prices, say sugar, goes up, eventually consumers pay more for sugar products at the store. As a trader, what can you tell us? Because it's very rare that inflation goes down in a straight line.
We definitely have seen a pickup in some of the soft commodities. Obviously, cocoa, anybody knows, looks even more parabolic than Nvidia, going to new all-time highs. But what we really have to keep an eye on now is when there's a departure between commodity prices and a dollar that's still in a trading range and yields that have gone up, especially on the heels of a Fed meeting. If you start to see a bigger rally, let's say, particularly in gold miners, and we would look at GDX over 30, or silver gets back over 26.5, which has been the most recent high in December, or gold gets through 2,200, or sugar gets through 23 cents. All of these things in the face of all these other headwinds would mean to us that inflation is getting its own life. And not only we say at that point that we're not going to see rates lower anytime soon, but we do believe that it could have an impact to the market overall, as many people have dismissed anything more than just sticky inflation after the last couple of reports and not necessarily hyperinflation. So keep an eye on those things, and thanks so much for watching.
Go to businessfirstam.com for where to see our show on TV.